I'm co-founding partner and director of research at Kepos Capital, which is an asset management company. We're not discretionary. I'm Italian, so I know that emotions take over. I'm somebody who uses statistical methods to do investment. They go, oh my God, that must be the most boring thing on the planet. One of these guys was like a superstar coming out of Wharton, and he still jokes. He said, well, you asked me, say, okay, do you know the capital asset pricing model? And the guy said, yes, I do. And so my question was, say, okay, tell me, is it a time series model or is it a cross-sectional model? And he goes like, oh my God, nobody had asked me that question. So it took me 10 minutes to even understand what it meant. If you're a quant, you say, well, guess what? I have 6,000 stocks in my portfolio. I doubt that anybody gave you $100 million to manage and you had a 10% return. Possible, but very often when you come out of college, you sit with somebody and you learn. So the next day at the conference, they invite the keynote speaker, who is the Nobel Prize winner, Danny Kahneman, and happened to be the gentleman who was across the table from me. Well, I would say the most obvious answer to that would be that it's fun. My name is Giorgio De Santis. I'm co-founding partner and director of research at Kepos Capital, which is an asset management company that uses systematic methods to develop investment strategies. A lot of things. Technically, I am the director of research, which means in a job like mine to interact with other researchers and so evaluate what they're looking at, evaluate their new ideas for new strategies, and eventually sign off so that those ideas become actual trading strategies. And we use those trading strategies to manage money for our clients, for our investors. My typical working days, I come in, I would say on any given day, I will have about 3 to 4 meetings, and those meetings typically can be either internal meetings, which is for management purposes, that we have to make a strategic decision or we have to decide whether to launch a new product, which in our case will be a new investment fund, so for a combination of strategies. And then can be decisions about recruiting new people, what we have to do. And then there will be other internal meetings that are more research specific. So on any given day, I will probably have a couple of research meetings with some of my researchers to get updates on what it is that they're looking at and give them feedback and suggestions. And then in between, I'm a free man, so I can decide to read papers, given what I do, obviously, trying to keep up with recent research, whether it is academic research or what we call practitioners research, and so try to stay on top of what is going on in my area. Well, I definitely love the research aspects or the challenges of the research aspects. I studied for my PhD in Chicago, so I often joke that Chicago is the school with rational expectations and market efficiencies were the prevailing ideas when I went to school there. So if I think about it now that I ended up doing what I do, I feel like, oh, maybe they'll take my PhD away. But the reality is, I think that what I did there, I learned some very powerful tools. I learned how to think. And so that makes it really fun for me to do research. The fact that I question what we do every day is actually fun. In fact, I will say I got into this job thinking, okay, it is going to be very, very hard to find anything that makes money. And that's because of my background. I got to believe that if there is a good opportunity, everybody's going to try to jump into that opportunity and prices will go back to what perfectly efficient market will command. On the other hand, when people hear that I'm a Chicago guy, they'll joke, they say, oh, you're one of those guys that'll never pick up a $20 bill from the sidewalk because it can't possibly be there. And my answer is, no. I have an amended version to that, which is I will pick it up. I will just know that it's very, very difficult to find a lot of $20 bills. So I don't plan on becoming super successful just sitting on the sidewalk and hoping that there is a $20 bill. It's the pressure during periods of tough performance. I know that we do our best with our researchers to really investigate what it is, evaluate what we do, and obviously trying to implement the best strategies that we can come up with, right? I wish I could find a strategy that just prints money every day and that would make everybody happy. But this is a very competitive market. Those people feel a lot of pressure. And so I would say that's the most stressful part of our job. Try to make investors comfortable that if you're going through a challenging period, the theme, the philosophy they decide to invest in is still valid, and hopefully they will feel better if they stick with it in the long term. Well, I would say the most obvious answer to that would be that it's fun. My wife and I would go to parties, and people would say, "Oh, what do you do?" And I would say, "Oh, I'm a hedge fund manager," and everybody would get so excited. And then when I revealed that I was a quantitative hedge fund manager, they just switch and talk to my wife about yoga and all this, because as a quant, you don't really have what we call war stories. Like, when people are at the party and they're drinking, they love to talk about, I don't know, what do you think of, I don't know, Apple, or what do you think of the stock? If you're a quant, you say, well, guess what? I have 6,000 stocks in my portfolio. So I would say that's the thing, that this is a job that can be super exciting. But if you told people, I'm somebody who uses statistical methods to do investment, they go like, oh my God, that must be the most boring thing on the planet. And it's also fun to try to explain why it is the opposite to a lot of people. I was invited to a conference in Boston, and the night before the conference, I happened to sit at the dinner. I was invited to this dinner with a bunch of other speakers, and I was sitting next to this woman who was actually part of it. She worked at as part of the investment management team for some states in the northwest of the U.S. And then there were other people. This was a very long table, and there was this gentleman sitting across from me, kind of an older guy. I can't remember what this woman said, but I remember in response, I said, well, I'm not really sure I agree with you, and I was trying to explain to her why, and this guy across from me with a smile goes like, oh my God, are you one of those crazy Chicago guys? And I said, well, as a matter of fact, I am. And so we started chatting, and he explained to me why he didn't really agree with some of the ideas, and we finished dinner and we said good night. And so the next day at the conference, they invite the keynote speaker, who is, the Nobel Prize winner, Danny Kahneman, and happened to be the gentleman who was across the table from me. The funny thing is that 2 years ago, I was invited to a conference to speak, and Danny Kahneman happened to be the keynote speaker again. So when I started my presentation, I said, well, let me give you a little bit of a story, an example of overconfidence. And so I started the story without revealing who it was. I said, I was this. And then I said, Professor Kahneman, I've been waiting for 15 years to apologize for that night. And it was fantastic. It was just so much fun. So yeah, I would say that's definitely an unusual. If I answer as a statistician, I'm going to say, no, I never say that anything is impossible, because I think, there is maybe a very slim probability of even extreme events. But yeah, definitely, somebody had told me when I came to the US, 15 years later, I would be a partner at Goldman Sachs, or 20 years later, I would have my own asset management firm, I would have laughed. When I went to Chicago, believe me, my first year was, at least the first few months, were traumatic for how tough it was. And there again, John Cochran, who became then my advisor and has become my one of my best friends, first of all, encouraged me to persist. And then I remember years later, when you are a penniless PhD student and you're not even sure you're going to make it to the end of the month, I received an offer from a bank. I was not done with my PhD, but I received an offer from a bank back in Europe to work for their research department. And I was so tempted to take it because you go like, okay, just imagine I will have my income. And I remember once again, John said, listen, you finish your PhD and your life will be so much more meaningful. You'll be excited about what you'll do. And, I will always be grateful for that advice because that definitely made a huge difference. I got to where I am through the path of getting a PhD in economics, although, as I was saying, I did spend quite a bit of time working on things like econometrics, statistics, and so on. But being a quant nowadays is definitely more difficult than it was when I started. Once again, and not surprisingly, it's a very competitive market. Nowadays, we hire a lot of people with PhDs in the hard sciences. So we hire people. We just brought in somebody recently with a PhD in particle physics, people who are getting masters in data science. We're almost getting to the point where the real technical skills, either a computer scientist or a statistician or a specialist in the higher sciences, are more valuable than your general knowledge of finance and economics. If I could go back to high school, I would definitely consider math, statistics. Those to me are things that it's crucial that you learn them as early as possible. Do not shy away from those classes. I even remember when I was in college, for instance, econometrics was optional. Now we're talking about the 80s here, very early 80s. So it was optional. And guess what? Out of, say, a class of about 200, 250 students, only about 15 elected to take that class. Why? Well, because it was perceived as being too difficult. And I would say, do not make that mistake. I always remember that my reaction is, it's not that I had to prove anything to anybody. I just thought, oh my God, in that class, I'm going to learn how to use the statistical methods to answer questions in economics. Why else did I study economics if I'm not able to do that? I would say, don't run away from difficult classes. Like to ask questions when I can kind of tell whether the person is thinking or not, right? Is basically as the ability to say, listen, I learned this tool, I never heard that question, but given what you just asked me, probably I would approach the problem this way. I don't care to get the right answer, I just want to see the way people think.
Can you give some example of what kind of question could it be?
Some of the people who now work for me, and with me, I should say, and have been with me for 20 years, still joke about the day I interviewed them, because this one of these guys was like a superstar coming out of Wharton, and he still jokes. He said, well, you asked me, you say, okay, do you know the capital asset pricing model? And the guy said, yes, I do. And so my question was, say, okay, tell me, is it a time series model or is it a cross-sectional model? And he goes like, oh my God, nobody had asked me that question. So it took me 10 minutes to even understand what it meant. I know for most people who don't know the capital asset pricing model, this may not mean a lot, but it's a way to see, to me, it was an easy question to see whether people were just good at taking a test. You'd rather have somebody come in and say, tell me about what you have done. And typically that's what I would like to do. But if I see somebody who says, oh, I was the head of the marketing department, and they were like, at 23? Really? Right? So what I really don't like, and believe it or not, I would say people underestimate how easy it is to catch those things is people who overstays what they have achieved. It throws me off when I see somebody who has been, say, for instance, out of college for a year and say, okay, I built a strategy, I managed, and I made X million dollars, where, very often you'll feel like, listen, you probably had a great experience working somewhere for a year. I doubt that anybody gave you $100 million to manage and you had a 10% return. Possible, but very often when you come out of college, you sit with somebody and you learn. You're not, right? To me, a simple, honest resume goes a long way. In fact, I would say, and again, not everybody does what I do, but when I look through a resume, guess what? The first things I cross out, that I highlight, are the things that, in my opinion, are yellow, that are red flags. Right? When I say, I don't buy it. It's a combination of things. It's definitely being interested in being a quant investor, so a quant researcher, being surrounded by people who think in those terms. What is required to get to the next levels is also to be able to really work with a lot of people. I know this may sound obvious, but it isn't. In fact, I will say, in the industry and in the quant space, there are definitely firms where the opposite is true. In fact, you go in, you do your own thing, you don't share it with anybody else because it's your secret recipes, and if you do really well, you get compensated for that. That's specific to us. Other people may have said, no, listen, as long as you can sit in your little cubicle and do what you need to do, it doesn't matter. But again, does anybody want a life like that? I wouldn't want a life like that. I would want a life, if I were young, to say, listen, I'm going to work really hard in school, try to get the technical skills, and hopefully get a job. And the day I start my job, go back to being humble and say, I really don't know anything. And hopefully by being with these people, I'm going to learn a lot. And that is going to make it so much fun. Well, for me, there are a couple of things, but again, I suspect these are fairly personal. One is, if I'm working on research, I really need to have a chunk of time set aside, and I can't be interrupted. I find it really, really hard. When I was in college, I used to have this, I know people are going to get scared if they hear this role, but I used to have, to discipline myself, I used to be in my room and study and say, okay, I'm going to start at 8 in the morning, and I'm not going to take a break until 11 o'clock. And even if my girlfriend called me, I did not answer. I know, sorry. I'm not with her anymore for obvious reasons. And then I would take my half an hour break and then go back, and then I would take lunch. So I was very, very, very disciplined. But even there, I remember that I would say, okay, I know that by 6 o'clock at night, I'm going to be done because I can't function after that. And guess what? For me, the idea that then at 6 o'clock I could go and do my ride on a motorcycle was really a way of combining, once again, the fun of studying what I wanted to study with the fun of doing something else. To me, the idea of sitting there for 14 hours a day and giving up everything else would have never worked.
So you would say at least 30% of your time you would spend for your hobbies and family even now?
Yeah, absolutely. I don't think there is just one way to be successful. So for instance, in my case, I like to think that the thing that really helped me was, so I started just being assigned to research projects. But very early on, because I liked it from my days as an academic, I started really working with a ton of other people where, somebody was working on a strategy and we would sit together and give them ideas. And somebody was working on the risk model, I would sit there. So the next thing you know is that it's almost natural that you have a team of people that you work with. And then, again, in my case, was not only doing research, but also really enjoyed explaining these things to investors. And so that really helped me getting to the next level, where all of a sudden you're not only the researcher, but you're also facing a lot of investors, explaining what you do. And so essentially you become a manager over time. I would say a lot of people who are successful and get to the top are people who have worked hard, have a lot of passion, but you have to be ready to say that, there is also a component of luck. Maybe they made the decision to try this, but this is not really where they get excited. I mean, I have seen people who felt, I do want to work in a hedge fund. Why? Well, this goes back to what I said a while ago, where I say, hey, when you're young, you hear that people in hedge funds make a lot of money, so you convince yourself that that's really your passion, but it isn't what you're doing. You think you're going to do it because, hey, if it works out, if I can make a lot of money, I'll be happy. It doesn't work that way, because if it is not something that you really enjoy, every day is going to be a very long and painful day. It is not easy. And again, it depends on when it is that you want to do it in your career, right? So if you're young, probably it is a bit easier. If I see somebody who has done something completely different, you got to wonder, say, okay, why is it that it will bring this person on board? For instance, we have one guy who has a PhD in machine learning, and so he actually used to work for a company doing facial recognition research, and then he ended up transitioning to finance. So it can be done, and he's done it really, really well. I would say the easiest path is probably when you're young, you get your skills, and then you start from there. In our area, it's tempting. Once again, the idea is if you're successful, it can be financially very rewarding. However, what people underestimate is that the success rate, the survival rate for hedge funds is a very small number, somewhere between 5 and 10%. At the moment, some of the biggest things that people talk about, and I'm not saying that I know that that's the future for the next 10 years, but people are investing a ton in what is called alternative data. So this idea, when I went to school, even in Chicago, and I worked with data on financial markets, they were very structured. I had to type them in because, of course, but it was, these are the countries, these are the dates, you put them in a worksheet or in a MATLAB program, and then you do your empirical analysis. Nowadays, there is much, much more work that is done on data, say, what is called unstructured data. So what they do is they learn to work with this data that are not structured the way we're used to. Or, there are a ton of firms now, companies that sell data on, say, credit card transactions, or satellite images. And so the question is, can we learn anything from those data and come up with new strategies? I'm not sure, because once again, I would say I definitely consider myself extremely lucky. I studied what I wanted to study. Then I wanted to be a professor, which back then I really enjoyed doing. I never thought I would end up in the financial industry, but it's been a great experience that I really enjoy for 20. So it may sound strange, but I'm not sure I would change. Yeah, I'm not sure I would change a lot. Either last or second to last year in high school. So somehow I always thought I was going to go to medical school. I'm sure it's not surprising, given that I am a bit of a geek, and I told you the story about not picking up the phone with my girlfriend. So I was always a pretty responsible, serious student. And then at some point late in high school, I started hanging out with this friend of mine who was not a very serious student. And so I remember that my philosophy teacher, we used to take 3 years of history of philosophy. One day at the end of the lecture, he said, okay, I would like for somebody to prepare this thing for next class and report to the class. And it was like a little section from Karl Marx, Das Kapital. This was towards the end of the class, and then the bell rang, and I packed my stuff and I was leaving, and he called me back and said, okay, Giorgio, I want you to do it. And I go like, okay. And I think it was a bit frustrated that he could tell that I was kind of losing my focus. And so I read that book. I still remember it was a yellow cover, and all of a sudden I go like, wow, this is really interesting. I found that really inspiring. So again, silly little event, but it made a huge difference. When I finished college, I had the opportunity to work at a bank back in my home country. And I said, no, I really don't want to do this. And I remember my dad got really frustrated with me because he said, most of your friends would beg to get a job at the bank. And I told him, I said, no, I just want to keep going. I want to, at that point, my mentor in college had told me about going abroad. And so I said, that's what I want to do. And I remember that my dad was a little bit frustrated because he said, what does it even mean to go and study more and be a researcher? But then, of course, then I got into Chicago, and then when I became a professor, then they were really proud, for them, the idea that I was teaching at a university. And then this is kind of a bit funny because when I took the offer from Goldman Sachs, I remember that my mom was kind of worried because I think she had been all proud of the fact that I was a professor. And then she goes, what are you going to tell my friends now? What are you, a banker? My conversation with my econometrics professor back in Italy, who told me, no, you should go abroad, when I didn't even thought about the idea of doing that. Or to John Cochran tell me, no, don't take that job, finish your PhD. I would say those definitely made a big difference.
What are your professional plans for the next couple of years?
Well, I have my company, so I think I'll be busy for a while. I would say for me, that is happiness. There are things in life that are very, very tough to manage. I would like to think that everybody gets equal chances, right? But as Milton Friedman said once, is that is never going to happen.
What's your favorite food?
So there is not one specific. It is definitely Italian food. I think it's so obvious that Italian food is better than anything else. And if anybody watches my video, they can get mad at me, but sorry.
Favorite thing for you to do in your free time?
Maybe this is not appropriate for a video that is supposed to inspire young people, but I like to ride my motorcycles. Riding my motorcycle has always been kind of my zen.
One thing you cannot live without?
My daughters.
Favorite country to visit?
Can you guess from my accents?
Your favorite book?
Steinbeck, so I just finished reading for the second time East of Eden, and I love that book.
Favorite show or movie?
I watch very little TV. I really enjoy watching Game of Thrones. I never thought I would.
What makes you sad?
In general, to see people who are not happy.
What makes you happy?
Opposite of what makes me sad, which is to see that people enjoy their lives.
You should get into my profession if you are.
If you think you would enjoy doing kind of a scientific research with financial data.
You should not get into what I do
if you just do it to make money. If I think about my life, I would say at some point you'll get a job and you will work at that job for many, many years. And those will be important years in your life. So try to make sure that you find an area where you really think you're going to be inspired. You want to get up every morning and say, oh, this is exciting. I'm going to go there and learn something or do something that matters to me and hopefully matters to others. Don't ever choose a profession just because you want to make money. And the other thing is always remember that although your job will take considerable amounts of your time every day and in terms of years, you need to have other things that you love in your life. A passion for movies, or passion for art, a passion for music or cooking, but make sure you have that. And the other thing is, if you love other people, remember they're not always going to be, they won't be there forever. So make sure that you enjoy the people that you love and every moment with them.